Now, the Organization of Petroleum Exporting Countries, OPEC, is in no rush whatsoever to make further cuts in oil output or to end some countries' exemptions to output limits. In that instance, think about Libya and Nigeria. That said, a meeting in Russia on the 24th of July is likely to consider further steps to support the market. Iran says OPEC should wait until the effects of the current reduced level of production becomes clear. The oil organization, Russia and other producers initially agreed to reduce output collectively by 1.8 million barrels of crude a day for 6 months starting on the 1st of January. Nigeria and Libya were exempted from those cuts because of production losses caused by unrest. Iran was given a small increase so it could recover market share lost while it was under Western sanctions. Now, while the participating countries have complied with their cut pledges, OPEC output has been rising in general, and that has tipped, in part, global market supplies back into surplus. So then let's dig deep into the details of what's going on in the oil markets. Nick Harper joins us now live from New York with more on this. Nick, in the 12 months to the 23rd of June, over 500 oil rigs had come back online in the United States. What's the break-even price for U.S. shale producers at the moment?
Well, Rama, for shale producers, it varies very widely depending on the different shale reserves around the country, but it's thought between around $35 to $50 a barrel, which is a very large margin. Of course, the lower end of the margin, the $35, that has helped to spur more of those oil rigs coming into production. And really, that's also been helped by the lowering of prices in recent months. It has given the shale industry more resilience to try and weather the storm, even though prices are dropping. And interestingly, if you compare it to the break-even price for US crude oil, that's higher. That's about $45 to $50. So shale, with that larger margin, is able to better weather these falling prices that we're seeing across the board.
Indeed. Speaking of US exports of crude oil, petroleum products, they have risen very strongly. They hit about 1.1 million barrels of crude a day in February. So where's this all going to first, and which OPEC and non-OPEC producers is the US displacing from the global market?
Yes, there's a lot of it, and a lot of it is leaving the country, primarily to places like China and Canada. They seem to be the two biggest countries who are taking in all of these exports of US oil. But we're also seeing it going to places like Mexico, Japan and Jordan. And interestingly, the largest oil company in Norway had ownership of very large amounts of shale reserves here in the United States. All of that, though, of course, is putting pressure on oil prices. This overproduction that is taking place in the United States is really worrying the rest of the world, and especially those OPEC oil producing countries, because it's frustrating the efforts that they're making to try and cut back on production. And in terms of the ramping up that we've seen in the US, well, the US Energy Information Agency expects that during the course of this year, output will have increased more than 5%, and for next year it's likely to increase by more than 7%. So a lot of oil being produced in the United States.
Indeed, but let's take a deeper dive into the data though. The Baker Hughes rig count up for 23 weeks in a row at the moment, but the output for new wells has been relatively flat, and there are nearly 6,000 unfinished shale oil wells as well, and that number has been going up quite a bit. So looking at those two data points, what is slowing down shale oil output?
Yeah, it's interesting, that figure that you mentioned, the increase of around 6,000. That is a 3-year high for what they call the drilled but uncompleted wells. Really, I think it comes down to concern over falling oil prices. Although there is that lower break-even point, the fact that we've seen, in terms of prices, a drop of about 20% just since the start of this year in the US, that does seem to be worrying producers, especially as we're once again seeing it head back down towards $40 a barrel. It settled in the US just a few moments ago just below $45, but there is that concern that it's falling further. I guess something that positions the shale industry in a good place at this time, that they have these wells, they're not operational, but they could become operational very quickly. It is much easier to get shale production to happen, and to happen fast. That fracking technique, it means less labour and also lower production costs. So they have these uncompleted wells because of the worry of falling oil prices, but when those prices start to increase, they can quickly get those rigs online.
Indeed. We'll leave it there for the time being. Thank you very much for the update. That's Nick Harper, of course, live in New York.